Welcome to the podcast, Ravi and Kate. How are you both?
Very
Hi,
good.
Todd.
Thanks. Hey, Todd. Thanks for having us.
Yeah, of course. So I like to kick off episodes with just telling the audience a little bit about our guests. So Kate, I'll go to you first, and then Ravi next. Tell us a little bit about your background before Sivo, and a little bit about yourself.
Sure. No, so Todd from the UK originally. Been building companies for about 15 years now. Sold two of those, took one through an IPO. Started my career as a software engineer. What else? It's all been Sivo consuming for the last couple of years. So yeah, fintech for me for 4 years, and landed on this rocket ship now that's Sivo. But I guess what I do at Sivo, my specialty, frankly, is sort of 0 to 10 million in ARR. I'm more of a builder. Ravi will talk to you about his superpowers when it comes to scaling. But yeah, I these days focus very much on what I love, which is products, right? When you finally get product market fit, it's just like lightning in a bottle. It's exhilarating. Working to do that again with secondary products coming up on Sivo now. So yeah, product and fundraising. My other strange love is a former CEO. Love to raise investment all the time. So that's my life these days.
All right, and Ravi?
Hey, Todd. Thanks for having me on the podcast. Really excited to be here.
Of course.
I came to Sivo about 5 months ago. Now, although it seems like a much longer time because it's been on a fast-growing rocket ship. Before Sivo, I have experience in both large companies like Fortune 200, like Capital One, and then I did a stint in few startups. The main one where I got a lot of experience in scaling was at Happy Money, where I started when we just launched the lending program to about 3.5 billion in origination when I left. So quite an exciting journey. I was really excited. I am really excited about Sivo, given the problem that we're addressing, given the traction that we have, and then the opportunity that we have in front of us.
Before jumping into exactly what Sivo does, what you guys are trying to solve, Kate, I always like to ask the founders that come on the show, was it something that was always on your path to become a founder? Some stories are, yes, I've always gonna be an entrepreneur. It's just a matter of when, or there was a problem I found through my corporate life that needed to be solved, that wasn't being solved, and kind of fell into it. What about you? Has it always been kind of your journey to eventually be an entrepreneur?
I think it has. I think I started playing Monopoly when I was about 5. So no, very much so. My background, as I mentioned, I'm from the UK. My parents were farmers, in fact, and they're probably the greatest entrepreneurs on the planet, quite frankly, because most problems to solve in small business are predictable with it. But when it comes to the weather, you better be a problem solver. So I'm one of 5 entrepreneurs, actually, in fact. So all of my siblings also have their own companies too. So yeah, always seem to be on track. I did corporate for a while, got a cheap eat at the appropriate time, and went out and started building.
Tell us a little bit more about Sivo, exactly what you do, the problem you're trying to solve, and when answering that, how'd you come to the name Sivo?
Sure, absolutely. The problem found us, in fact. We went into Y Combinator in W21 batch with a slightly different concept. We were going to build a consumer lending business in LATAM. My co-founder is from Mexico City. When we got into YC with the team that we had, we found that we knew more about raising debt capital than was typical of other YC founders, who started reaching out and saying, whoa, that it sucks, it takes too long, it's too complex. And we thought, wow, we didn't realize, we knew it sucked, but we didn't realize it was that big of a problem. And so we thought, you know what, there's a bigger product here. Let's build debt as a service. Let's give, the YC community what they're looking for, and make debt much more programmatic, easier to understand, and faster to tap into. So that's what we did. We got the blessing of Michael Seibel at YC, who said, if you can solve for this, we'll fill your boots every 6 months with new fintechs as the batch is open. So we got to work. And then Sivo, there's a lot of LATAM, a lot of Latino influence in the company, given that my co-founder is Mexican. So Sivo comes from Inclusivo. And so what that means is essentially inclusive financial inclusion. That's very important to us. And we see that, Sivo, we can provide debt capital to fintechs that are really leveling the playing field for financial inclusion as such. So That's something we're very passionate about bringing an end to predatory lending, which is all too common in emerging markets, particularly like Mexico. And so by funding great fintechs that aren't predatory, we hope to bring an end to that and more financial inclusion. So that's where Sivo came from.
Now, is there a typical or an ideal Sivo customer in terms of size, revenue size, where the company is in terms of their growth scale? Like, is there a perfect fit, or do you serve the range of fintechs and just depending on what their needs are?
Yeah, I think I'm going to hand this one off to Ravi, but just very quickly, if you'd asked me when we started Sivo, I would have assumed it would have been all early stage lenders. What really surprised me is that once you've raised debt once, it doesn't get any easier when you want to go back and need a few more million. It's just as complex as an opportunity for fees and so forth, with mostly for our competitors. So seeing a lot of late stage lenders, come in that huge companies at this point that love the programmatic and simplistic nature of Sivo. But with that said, Ravi, I think this is a good one for you.
Yeah, absolutely. Look, I think if you look at taking a step back, what does Sivo do that other companies might not be able to provide? And there's two components here, right? Like, we are very founder friendly in our offering, and then the other side is we are tech friendly. Kate touched on it a little bit, where she said, like, established companies really like us because we reduce the operational burden, make it easier for them to access the capital as well as manage the capital stack. On the early stage side of things, we are able to work with companies that are even pre-product, and nobody else in the market that we know of does that. So what we do is we enable the founders to come to us and build their loan tape with us and scale, and we are able to programmatically grow with them. The thing that we do also provide is a very transparent pricing experience or a transparent agreement. So there is no hidden fees, there's no unused fee, there's no warrants, so no dilution for the founder. So it provides the most optionality for a founder that comes in and says, I want to try to enter this lending product. Who will be the best capital partner for me? And I think Sivo fits that bill. So we certainly work, there's a really nice fit. As Kate was saying, we are almost the de facto or the default lending partner for all YC companies. And we thought that would be it, but YC only makes up 30 to 40% of our pipeline. We work with a lot of companies where they're coming to us and we are their second choice for capital. So they work with somebody and then they kind of learn the hard way on all the hidden fees, the operational burden that they have to face. They come to Sivo and then they really like the offering where we are more focused on bringing them on the platform and then growing them seamlessly rather than putting a lot of burden on them.
You mentioned a couple of things in there. If I was a lender and I wasn't aware of Sivo yet, what are some of the issues I would run into in terms of trying to acquire traditional debt capital? Is it that, I have to build relationships I don't have? You mentioned some of the hidden fees, the complications in either the terms. I mean, what are kind of like the top 2 or 3 things I'd run into if I'm a, say early lender in need of debt capital to help me build my book? But I'm unaware of Sivo right now.
I think.
Yeah, so
go ahead.
Go ahead. Yeah.
Yeah, I was going to say, I think it comes back to when we built Sivo, right? Last summer we met the better part of more than 200 fintechs from around the world, and that's when we got really excited about Sivo. Because to your question, Todd, they all had the same 4 or 5 problems, whether they were in Singapore, London, New York, whatever stage they were at. It takes too long to raise capital. It's dilutive. It goes after their equity. Legally very expensive. It's complex, and then the reporting is all manual. You have this life of giant spreadsheets to fill out, but the whole process takes on average up to 7 months in the US, which is just unheard of, right? So we that was the set of problems. We said, all right, let's reverse engineer that into the product that we have today that gave us product market fit. But those it's that it's going to take too long. It's too difficult, too complex to understand. It's going to come after equity. and lots of fees, and absolutely the opposite of programmatic. APIs do not exist in the traditional world of debt capital.
Did you want to add something?
Yeah, sure. I think the other thing that, as a founder, and maybe especially if it's your first foray into lending, what people might not realize is you are in the early stages of product development and you're entering a relationship that is for 3, in most cases, 4 years. As a startup, you don't know where you're going to be in 4 years, but you're already tied into a process, tied into a system, tied into a debt capital source, which might not turn out to be in your best interest in 6 months, 8 months, 9 months time. And quite honestly, like if the product doesn't work, you might not need that at all. And I think that's where Sivo does make a difference, where we enable you to have the optionality, have the flexibility to test out your product. And if you don't want to grow, that's fine. And if you grow, we are able to scale with you.
That's a great answer. Ravi's is better than mine.
In terms of a little bit more exactly how the product works, who ultimately is lending the money through Sivo, and where is, so if I'm a lender, I use Sivo, where is the the money coming from, and how do some of the mechanics work? If I was a lender, I found you guys and said, hey, how can you help me raise that capital?
Maybe I'll answer the question, but first it might be helpful for Kate to walk through the product and the platform that we have, and I think that'll help the listeners also better understand what differentiates Sivo over here.
That'd be great.
Sure. No, happy to. We I always oversimplify and call Sivo a giant credit card or a giant credit line to fund lending. It's first, so in terms of fintech comes on, they can either come sign up at sivo.com and design a debt line essentially that will align with their growth. So they go through a wizard process. This is unique to Sivo. Nobody else has this. Our risk engine prices out the debt line, tells them exactly what they're going to have to deposit in terms of collateral with us to get started, and what their leverage plan is going to be. We can typically get most companies to 10x in leverage within 12 months. And then one of the primary reasons that fintechs love the Sivo product is because they only pay interest on what they draw, which is where I kind of, it's similar to a credit line essentially. Yeah. So for the first 30 months, they pay interest only on what they draw. We don't ask for the principal to come back. In month 30, they've got 6 months to amortize. They will repay the principal or just refi with us again and go interest only. So it means that it's super flexible. The top credit products that we fund, that we see, it's credit card programs, buy now, pay later, invoice factoring, earned income access, and merchant cash events. And those are all really short-term products, which Ravi can get into. But that means when you've got this credit line, you can just draw on, pay interest on what you've taken. It makes it's just works extremely well versus a traditional model of where you're making these principal payments, you're paying fees on unused facility, commitment fees, lots of legal. We don't do any of that. And then the reporting itself is all through API or through Zapier. So it means we know in real time what's going on with our customers' lending programs, which means that we can spot opportunities, offer to scale, offer them more money, or also kind of go, oh, this isn't quite working as you thought. We need to get you on with your credit risk analyst at Sivo and figure out what's up. But or they can come through our sales team as well. But we're pretty proud of the product that we built directly onto the platform. I will say, before I turn it back to Ravi, one of the great things that we learned as well with Sivo is that there was a challenge on the supply side, on the capital side as well, institutions, because they would like exposure to different fintechs, but sometimes the check size that they write is so big that to Ravi's point, this may be a relatively young company growing like a weed, but don't need $100 million off the bat, right? But then you've got said bank, I want to work with those companies. So by coming to Sivo and saying, look, Sivo, US consumer focused, buy now, pay later, what have you got? We'll have several originators, several fintechs working in that very defined set of parameters, which means that 100 million can go to work. Give that,
and they don't have to worry about it being one company. It could be multiple companies through your platform.
They've got diversification. They've got live reporting to a level that you just wouldn't have had in the past. So Sivo actually solves for both sides of the marketplace. Ravi, go ahead and add to that.
No, I think that was very good summary. So we do have like diverse sources of capital, some of which include our own flexible sources of capital. And we can talk about that when we talk about our products. And then also, the traditional capital sources that you see, credit funds, banks, and other institutions. And the idea here is that we build a platform that enables us to onboard different originators, and then we can create the ecosystem for a capital provider to come in and say, this is what I'm looking for. And I can like invest in a basket of companies rather than trying to bet on one company. One of the main reasons these larger institutions don't work with startups, even though they might be growing like a weed, is because some of the fixed cost on legal operations far exceeds what their revenue might be in the first 2 years. What we have done at Sivo, we said, look, it doesn't need to be a de novo deal for everything. We can actually have a standardized approach to both capital, the legal side of things, standardized approach to reporting, which is what we do with our Zapier and API connections, which massively reduces the operational costs and burden even on our side. So we are able to manage a basket of companies that are in their infancy, but we know that some of them will be the next unicorns. And it's in the best interest of the backend capital to come with Sivo and saying, let me actually engage with Sivo so that I can kind of engage with the company as they grow to a scale where it makes sense for me.
Is there a limit on size or scale of fintech? If sometimes you see in the market and in the news, X lender raised 800 million from whatever debt source. On your platform, is there a limit, or does it scale all the way up?
Yeah, since it is a platform, and since we have spent a lot of time on product and engineering, we actually can scale without a lot of hurdles. So our lines range on the platform today, like anywhere from like 100,000, which is the smallest line, all the way up to 500 million, and we can have anything in between. And look, I think even beyond that 500 million, once you have the algorithm, once you have the program running, it's just a matter of like calculating a higher number, and we are very confident that we can bring in even larger deals if needed on the platform.
Yeah, I think I'll add to that, Todd. Honestly, if you see our pipeline, particularly of late, it's a who's who in fintech of some very, very large players at this point. Alec will be sweating, like, don't say any more than that, but it's just, and these guys are confident about our ability to be able to keep up with them, right? So they can just focus on their growth. We're in the sidecar, we're making sure they've got all the funding that they need to operate a very successful program. But that's, we're very excited about the folks that are coming to us now and saying, hey, when they could work with anybody in Wall Street, quite frankly, but they're showing up at Sivo these days, which is just terrific.
We're constantly hearing in the news, especially lately, of all the indicators that we might be going into a recession. We're in a recession. We're on the way to a recession. How does the platform handle a potential downturn, if there is any obvious impact? And just what are your general thoughts on how this type of environment might differ from either the past 2 years or even the past 6 months, in how companies might look or seek debt capital? Are there big changes? Kind of what are your thoughts on the overall macro environment?
Yeah, I can start, and then Kate, hand it over to you. I think we can start with the question, part of the question, Todd, that you asked about how does it differ from the last 2 years? And I think that is pretty evident. Last 2 years, it was a pretty easy place to raise money. And it was more of a growth at all costs, and we'll figure out profitability later. But I think right now we are in a position where folks are not coming in and saying, I raised 100 million, so I'll just lend off a balance sheet and then figure out the product economics later. There is a switch where folks at least are realizing that we need to work on profitability. And we think, and we are seeing this, where companies that are coming in and saying, growth definitely is one of my objective function, but managing my unit economics and understanding when my product turns to positive unit economics, and do I have a clear articulation of the drivers of that? I think those are the guys that are going to start seeing positive traction. It's the indications are all there, right? Like, we are seeing rate hikes, we are seeing inflation, And 2023 might not be a pleasant time for a lot of fintechs. And we don't anticipate all of them making through. But I think the ones that with strong fundamentals, we do think in every category they'll make it through. So when you look at like some of the larger institutions, they'll go in and then the category wide, they say, okay, we're not going to deal with this category. And that's fine, right? Like I think that's a decision that you make as a company. Where Sivo, I think we have invested a lot of time and effort into our risk team. And we have a pretty seasoned team that has seen like past recessions. And what we are doing is we are evaluating every deal on an individual basis. So we might not like the category that the business is in, but if we think that it has the right team, it has the right framework to go through the recession or go through a tougher time, I think we will still be bullish on investing in those companies. So we still think that, you know, just like 2008, 2007, we think like in the next year, 2022, 23, we'll see the next wave of unicorns come through, and we are pretty optimistic that we'll be able to kind of work, actually find them, but also work with them and scale with them over the next 5-10 years.
Yeah, and I think that to add to what Ravi said, my co-founder and I are very lucky with an incredibly strong team, and a team that have the right people that have seen recession before. It's important to know how to operate in that type of environment. Ravi has, our head of risk has, right? So they've seen this. And then it really comes down to this lower level of reporting, because of the fact that we have line of sight right through to the borrower and the performance in terms of payments and so forth. We can spot in real time, you know, when something is going wrong. Whereas our competitors, pretty much all of them, I don't know one that doesn't operate outside of a monthly spreadsheet that gets filled out, right? And the report gets sent in. So they're very, very delayed in seeing that there is an issue. So because we're able to see that in real time, we can catch it faster. It also gives more comfort to the folks that provide Sivo with capital. So that's a big differentiator. But I think, again, just one last point, my co-founder and I didn't have a credit background, right? So we naturally challenged all the inefficiencies, you know, around raising debt capital, which is obviously evident in Sivo. But the rest of the leadership team have been doing this for decades, right? So that combination of those two sets of backgrounds is proven well for us, and we'll certainly, I mean, we anticipate to come out, again, Ravi has said, larger banks, larger credit funds are going to say, hey, don't want to operate in that category anymore, bang, cut it, right? But there's quality fintechs, originators within those categories that we can then sweep up. And if we're doing a great job around managing our risk, we're going to come out through, you know, into 2024 just absolutely just flying.
Curious, you know, I always like to ask companies this question, which is, you know, ultimately, how do you view yourselves within the broader fintech market? Is it just we are, you know, debt as a service? We're helping companies acquire debt capital, obviously significantly more efficiently than a traditional process? Or do you view yourselves as kind of more of a new age small business or business type bank in a way? Obviously not banking license way, but that's kind of this new age way to serve, you know, either small, medium, or large fintechs with obviously debt needs, but they're more general or more broader needs than just the debt.
Yeah, I can speak to that one is running product now. We are, you know, we're always listening, we're always learning, right? And what we observed through, we've had 9 billion in demand in just over a year since launch. We were profitable in under 6 months. I mean, it's just been crazy. And we have a very, very full pipeline. What we've observed over that first year is that you just kind of hit the nail on the head, Todd, is it's not just capital, right? If you're going to come out and launch a card program, whether you're a brand new fintech or you're a huge retailer that wants to put their own buy now, pay later program, embed that for their customers, they need more than just the capital. It's the license, it's the underwriting, it's the reporting to the credit bureaus, it's the LMS, it's all those other pieces. So we've seen our customers delayed in, frankly, making us money because we've had capital ready for them, and we've watched them go through months of putting their lending stack together. So super hyped to announce we're launching in Q1 a product called Sivo Ignite. And Sivo Ignite is essentially Stripe for credit, right? As Stripe processes payments, Sivo's going to be processing, Sivo Ignite will process credit. And what that means is someone will be able to come onto the platform, choose if they want to operate, they want to spin up buy now, pay later or a credit card. If it's, on the card side, Sivo Ignite will issue the cards, provide the capital, do the underwriting. We're going to be able to do that in more than 150 countries, by the way. Do the reporting to the credit bureaus, the loan management system, all of that piece, the compliance piece as well, all under one API. So it's literally, okay, I want to go and spin up this program straight to Sivo, use Sivo Ignite, and you're up and running in hours, days at the most to be able to get a program out into the market. And that Ignite will dwarf where Sivo is today. It's just, well, you can see the passion. I'm very, very excited about that. So yeah,
I can tell.
that's where we're going next.
Shifting the conversation a little bit. Obviously, you've been at Sivo for quite some time, Ravi a little bit less. But is there one or a handful of lessons that you've learned that either you changed something from when you started to today, or just something that you learned along the way that if another founder picked up the episode, they might find useful?
For sure. I've learned, this is going to sound a little funny in this environment, money is infinite, right? And time is not, right? So you got to be really careful as a founder how you invest your time. And there's nothing like too much validation. To be honest, I think building a startup is not that complicated as long as you invest time up front to make sure there is a market, right, for your product. And even today, the internet is littered with failed startups, which a lot of the time would be taking a little bit more time up front before starting to write code, even thinking about a brand, making sure that there's a market there for their product. They'd be more likely to survive. So my advice is that I've had failures, those are always the best lessons, the most valuable. I've got a little bit of a playbook and a formula these days, thankfully, but it always comes back to that. Just invest plenty of time up front before you rush out and build a business. Make sure you've got a customer. And that's not difficult to validate, to be honest.
Best piece of advice that you've received, either Ravi or Kate, in terms of Sivo or just generally in terms of your career?
Sure. As a CEO, two things really. I was told, just when you're a CEO, you have two jobs: is find great people and figure out how to pay for them. So because you can't do it all, right? It's all about team. Sivo at this stage will continue to grow and succeed because of the team that we have, and that all comes down to people. So that was one thing, find great people, figure out how to pay for them. The second one was to always think as a shareholder, right? Set your ego aside. You have a responsibility to your investors and to your team. So at this stage, with Sivo and stepping aside and bringing Ravi in, who's infinitely more skilled at taking Sivo to 100 million in ARR plus, right? Seeing that, recognizing that, and saying that's fine, right? Step aside, move into the seat that makes more sense. And to again, there's companies out there that haven't done that and have suffered accordingly. So those are the two best pieces of advice that I had. Ravi, I'm not sure, but you probably a lot more, but you can share yours.
Yeah, I'll just share a simple one. Long time back, somebody suggested this to me. I think if you don't respect your calendar, nobody will. So I think there's a element of as you're growing in an organization, it's very easy to go back to hey, I'm going to get my hands dirty and do the work. But you need to start putting more time towards more strategic thinking or more thought process behind and letting other people do their work. And so it's easy to say, okay, this 2 hours, I'm going to think about this strategy. But then when you look at it, you end up spending time on Slack or email or whatever the case might be. And so, if you're making an appointment with yourself, it has to be the same level of rigor as if you're making an appointment with the CEO. You're not going to show up to a CEO appointment and then start checking your email. Why would you do that with your own appointment?
Yep, that's true. That's good advice. Yeah, you both obviously have mentioned team various times through the conversation. What does the team look like? What's the makeup of the team in terms of engineers, product team? Tell us a little bit more about those around you both at Sivo.
Yeah, I can speak to that. So we are a team of about 38 people, and Sivo is globally distributed. So we have people spread all across the world, including Latin America, as Kate mentioned earlier. We have folks in India, in Europe, in Canada. So pretty much like all time zones that you can think of. About a little more than half of our team is actually product and engineering. And we think that's the right focus for us to build the platform. And that's what separates us from the traditional debt company. And then the rest of the team, you have like some of the operations, finance, and then the sales and risk team in there.
You've obviously you help others raise capital. I believe you've raised some capital yourself. In terms of that process, anything that you've learned that similar to before, that if another founder picked it up, that they might find useful through your time raising capital from investors, concept and how you adjusted, or just something that an investor told you that might have stuck with you?
Sure. I think so. When we graduated YC W21, we had a very high valuation, and that was, I've been doing this a long time, and it was something that we really had to sit down and think about, because when you take a large valuation, especially at seed stage, you better be confident that your metrics, that you're going to grow into that valuation. Otherwise, you set yourself up for a down round. We decided to go with it. We had that much confidence, and so did YC, quite frankly, in where Sivo could go. So we took 10 million in at a seed valuation of 100 million. And then had to get to work on growing into that, of which we were profitable in less than 6 months. So the bet was the right one. But I would say for other founders, if you're offered a big valuation, you can, I think, particularly if you're first time, second time founder, what have you, it can be very tempting to celebrate and go, woo, but you really want to pause and think strategically, is this the right thing for me here? Because when you're raising money, you're raising for life, right, over the life of the company. So you really need to be thinking long term in terms of how that decision is going to fit in. We became profitable so quickly that we decided to hold off on doing a Series A. We went back to our investors. They agreed with that. We took in another 5 million from existing investors and a couple of strategics earlier this year, and have not needed to raise since then. So that's been interesting. That's worked out quite well for us, given the climate. So we do spend a lot of time replying to great investors, just not now. We're not raising at this point. We'll sort of see how things go. But yeah, that would be my advice there. I think the other piece of advice, which again is coming out of YC, I've done YC and I've done 500 startups, actually both hammer home. Not too many slides. Keep it very, very simple. Keep it under a minute, right? And so when you go, I always stumble when I go into these events or whatever and have to pitch Sivo or talk about Sivo, and I've got like 5 or 10 minutes to do it. I'm like, shit. Oh, sorry, excuse me. What do I do?
You can curse. It doesn't matter.
What am I going to talk about for the other 4 minutes? But yeah, no, that would be my advice there anyway.
Well, you touched on my next question, which was, obviously you've been through YC, you've been through 500 startups. You guys won our pitch competition at our event. What do programs like this generally, do they help? In how do they help startups? Is it validation? Is it advice? Is it, connections? Are there 2 or 3 things that you found in going through some of these programs that you find to be, hey, this is a reason to consider trying to get into some of these?
Yeah, I think in the case of YC is very difficult to get into, and I think again, I've been doing this a long time, right? And so when we looked at the program and looked at the costs in terms of equity and so forth, like, should we do it actually, in fact? And I thought about that for about 30 seconds. And then I actually talked to other folks as well. They're like, you need to do it. It's just it's such an advantage for companies, both in terms of being inside the YC ecosystem that's very big, being able to tap into advice from other YC founders, sell into each company. YC is obviously everybody from Airbnb and Stripe sort of down. So I've drank all the Kool-Aid, right? So if I were to do another venture after Sivo, I'd put them all through YC if we could get them in there. I think with and then with events like Fintech Nexus and just winning that, of which Alec was the guy on stage to get that done. Just amazing, like the inbound we had after that. Like we were just, I was, you know, thrilled. So I think in the case of the event and winning the competition, it's generated sales for us. It generated leads for us for sure, generated leads on the capital, definitely generated leads on the investment side. We got hit hard with a lot of inbound investment investors from winning the competition. So I think there's competitions as well at certain levels. Yours is up here, right, versus some of the other stuff that's out there. So it was definitely worth the time and investment to prep for it, and we were thrilled to have Alec walk away with it and win the competition.
Well, that's nice to hear in terms of the event. Yeah, we have just a few minutes left. I like to end a little bit lighter with some fun questions. And so, do each of you have a favorite book?
Go for it, Ravi. Yours is better than mine. Go for it.
It's kind of, so the kind of books that I like to read that are non-business, the ones that I like, my favorite is A Light in August by Faulkner. I don't know if many people have read it, but it's a little dark book, I would say. And Blood Meridian by Cormac McCarthy. Again, it's really well written, almost poetic, but not for everyone.
Cool. Mine was far more boring. I have a passion for DeFi, so mine was Economics and Math of Token Engineering by Lisa Tan. I need a life, apparently.
Avoiding burnout and not working yourself to death is obviously key for all founders and CEOs. What do you do to unwind, step away, and just take a few minutes to ensure that you don't overdo it?
I can start there. I cook dinner with my wife. We drink some wine, watch a movie, or get outdoors, preferably as much as possible. We live in Vancouver, so there's lots of opportunities to get outside, whether during the summer or now. Coming up on winter, ski season will be shortly here. But yeah, that's pretty much how I spend my spare time.
And we didn't touch on this, but I have 2 little kids, like 4 and 2, and then a third one on the way. So there is not much to unwind, but it's a very exhilarate. Like it's an amazing experience. Every moment it's filled with a lot of work. I would say even harder than the work that we do at Sivo. But I'm really grateful to have that.
I can sympathize. I have a 4-year-old and a 6-week-old.
Oh,
so
congratulations.
So yes, we are still in the early stages of number 2. So
yeah,
quite the adventure.
You're still on 3 hours of sleep, so
yeah, exactly. Next question is: do you follow sports? Do sports? Do you have favorite sports or sports teams that you might root for?
I do. I'm a horrible avid football fan, NFL fan. So as a Seahawks fan for a long time, you kind of have to be up here in Vancouver down the street from Seattle. But now Russell's gone, right? I've been thinking the unthinkable, which is changing teams. So my wife is a very reluctant Rams fan. Like she has to watch football during the season. So she's like, fine, I like the Rams uniform the best. I'm going to just support them. And so we may, we changed, and now I'm watching a lot more Rams games than Seahawks.
There's no sports in my life.
Favorite vacation spot?
For me, Italy and Mexico. So Tuscany when in Italy, and then Baja, Los Cabos, but down below San Lucas and so on in Mexico.
Yeah, and I travel a lot, but quite honestly, like I do like visiting my family. My family is still in India, and so we don't get there much often, given the family here. But I want to like go and visit my parents or my grandmother over there.
And then final question: biggest inspiration in life?
From a personal perspective, it's a cliche, but my wife, she reminds me that life is full of color and it's not all about work, and that's very healthy for me. On the work front, Ravi, frankly, he's come in just in the last 5 months. He's done tremendous things at Sivo. I always want to be learning. sometimes I get a little jaded and think, well, how much more can I learn? But this guy is just, teaching me every day. So definitely he's become a huge inspiration for me as well.
I appreciate that. For me, I think it's it's definitely cliche, but it is true. Like, my parents are my inspiration. Growing up, like my dad had to actually put himself through school while he had 3 kids, 3 little kids. Like, I have 2 brothers, and and obviously my mom had to take care of all of us. But if they didn't go through all the hard work, I would not be here, for sure.
Well, Ravi and Kate, thank you very much for giving me a few minutes today. If someone listened to the episode, wanted to reach out, find Sivo, find you both, how can they do that? How can they reach out?
Definitely just head to sivo.com, hit the live chat there. It's generally 1 or 2 folks to get to either of us. So Ravi and I are both free hands-on all the time. So yeah, just hit us up on live chat.
All right. Well, thank you very much again for your time. Continued success. Hopefully we'll get you back sometime in the future.
Perfect. Thanks, Todd. Thanks for having us.
Yep. Thank you.